Your markets news: Asian equities were mostly in the red today. China stocks slipped on Thursday as official data underscored persistent deflationary pressure despite fresh government consumption stimulus intensifying a scramble for offshore assets, while Hong Kong shares closed at a one-month low. Japan's Nikkei dropped 1.2%. The Hang Seng also declined by 0.2%, and the Shanghai Composite lost 0.6%. Over in the United States, stocks ended Wednesday little changed, with investors digesting the impact of two conflicting set of jobs data and a report that President-elect Donald Trump was mulling a national economic emergency declaration on inflation. The S&P 500 gained 0.16%. The Nasdaq Composite Index lost 0.6%, and the Dow Jones Industrial is down 0.25%. U.S. stock markets are closed today to mark a national day of mourning following the death of former President Jimmy Carter. And back home, the all-share index is currently up at 0.5% at 83,579. When we look at our currencies, the US dollar to the rand is currently at 18.85, the euro is at 19.46, and the pound is at 23.21. When we look at the commodities, gold is currently trading at 2,664, platinum at 956, and the Brent crude oil is at $75.92 a barrel. Our market commentator for today is Muhammed Wagley. He's the portfolio manager at Sasfin Securities. Good afternoon, Muhammed. Thank you so much for making time to have a chat with us. Just a short while ago, SABC released manufacturing data, which shows that it has actually gone down by 2.6%. And when you put it vis-a-vis the PMI numbers from APSA yesterday, it really shows how under pressure the manufacturing sector has been in the country. What are your thoughts on this latest data?
Yeah, well, first of all, always a pleasure to be here on Point. And, I wish all the viewers and yourself a great start to the year. But if we look at these numbers, I've got to say they are somewhat demoralizing. You mentioned, they had come down by 2% in November year on year, and this had followed on from a relatively strong October the previous month. So it is somewhat disappointing, but I think on the back of those APSA PMI numbers that we got yesterday, it wasn't sort of too unreasonable to expect some softness here. But I will note that this does represent sort of the largest fall since June of last year. Again, a demoralizing way to start the new year. And, when you look at sort of all of the optimism that we're seeing surrounding the GNU and things like that, it was somewhat disappointing, but I've got to say not entirely unexpected. Look, at the end of the day, there's still loads of issues that we need to resolve. I think it's been great that, broadly speaking, by and large, we've managed to keep the lights on, but there's still quite a few sort of issues that are existing in the background, things like the issues with the water, the rail, issues at the ports as well. It's clear we're not yet out of the woods in this respect, and ultimately this is going to take a little bit of time, in fact quite a little bit of time, to completely reverse this trend. And I think given where we are, that is fair. I think markets have been over exuberant, you could even say, in relation to sort of the optimism that we're seeing around the government and things like that. But, it's not going to be smooth sailing till we get to that point of a consistent and sustainable uptrend in relation to, these production numbers. So, yeah, bad news, but ultimately it'll take a bit of time. And I do think, you've got to also take it somewhat with a pinch of salt. I do think we were somewhat too over exuberant in relation to all of this optimism, and this sort of thing is going to take a little bit of time to reverse.
Right. Let's head over to the U.S., Mohammed. Tomorrow we're expecting the U.S. to add about 154,000 jobs for December when they release the non-farm payroll numbers. Tomorrow the unemployment rate is also anticipated to hold steady at around 4.2% during the same period. What are the predictions from Sasfin Securities with regard to the non-farm payroll numbers?
So it's interesting. I think broadly speaking, that is the expectation. We're not expecting to see too much of a change in terms of the unemployment rate. And broadly speaking, 154K jobs in December does sound reasonable. In my view, that would be evidence of a really robust, strong US labor market. The feeling is that that could put a bit of pressure on the Federal Reserve to be a bit more conservative with their rate cutting, and we'll probably see a little bit more dollar strength in that respect. So I'm not too sure if the markets would like that too much. But on the other hand, if we do see a weaker than expected report, it'll probably have sort of the opposite effect, And given Mr. Trump's rhetoric in the past couple of days about interest rates being far too high, it does look likely that we'd much prefer that softer number, which would obviously then put pressure on the Fed to be a little bit more aggressive with their cuts, which, needless to say, they have, at least in terms of their tone, they've been a little bit more cautious in their approach, at least going into 2025. So it'd be very interesting to see how this plays out tomorrow.
Yeah. As we head over back to the African continent, news this morning that the Nigerian Communications Commission, the Telecom regulator, has scheduled a meeting for today. I'm not sure if that meeting has happened yet, but they're proposing a 100% tariff hike in the telecom sector. And we know that the MTN is currently operating in that country. What would that mean for MTN?
Spot on. So, I think it's not just MTN Nigeria, but I think the sector as a whole has been lobbying, the regulator for permission to actually double the prices. As it turns out, the hikes are going to come, at least from the feedback that I've seen here by the regulator, but it's very unlikely that the quantum is going to be the 100% that they're looking for. I think it's good to see that the regulator is cognizant about the pressure that would put on the Nigerian consumer, but at the same time emphasizing the importance of still trying to really cultivate growth within the telecom sector in Nigeria. Now, within the context of MTN, we know that they've been under quite a bit of pressure in Nigeria over the past couple of years, and I think that pressure that we saw over there has underpinned the poor share performance that we've seen from MTN over that period. So for them to have at least a view of some respite in one of their absolute key markets is without a doubt finally some good news for the company, and hopefully a step in the right direction. But this is also one of those where you're going to wait and watch. You wouldn't necessarily bet the house on this turning around just yet. We'd be looking for a little bit more good news before we can go ahead and say that. Yeah.
Before I let you go, I see that the rand to the US dollar is heading a little bit closer to that 19 rand mark again. What's driving this? Could it be dollar strength, or is it something that we should be much more aware of, the side?
Look, I think broadly speaking, we had been quite strong up and until the election in the US over in November, and subsequent to that, we have been seeing a little bit of softness. I think you hit the nail on the head. I think what we're seeing is dollar strength, and I think tomorrow's non-farm payroll numbers also have the capacity to potentially impact that. So yeah, broadly speaking, I would say that it is dollar strength, and it's something that could also move in the near future as well, depending how some of the data comes out.
Mohammed, thank you so much for dissecting the markets for us. Thank you so much for your time, and enjoy the rest of the day.